day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Wednesday, the 29th of January, 2020, just getting on to 5 p.m. Central Time. So as we look at the market, it's sort of a mixed picture. You can almost tell by the colors that you have a mixed day. Metal market's up a little bit, and the gold, the miners were up, the silver market up a little bit. TLT, a big gainer today. That's the 20-year plus Treasury instruments. As the FOMC meeting was held today, the conference was held, and the market took what the Fed chair to be as being very dovish. Market kicked up on the interest rates. The 10-year benchmark U.S. bond, I think it goes 1.589 or so. So under the 1.59 level, that's a big move that this market's had to the downside. The question is it going to attack the October numbers of the 1.44? I think traders walked away with the idea the Fed's not only got their back, but they're concerned about things. When asked about the coronavirus, it's a concern. They want to know more. World Health Organization tomorrow, another emergency meeting. We'll all be able to hear it. Are they going to declare this a world emergency where they can take and start taking control and putting everything under their banner and coordinate things better than one country does something, another thing? I think that you'd be better off with that. But if they do it, does that sort of panic the market? Don't know. What I'd like them to answer, where's the crest of this disease? Is this it? Or are we talking like some people think, 60,000, 100,000 cases? I don't know. None of us seem to. So we're trying to find that out. What we do understand is that China's having a serious issue. Are they going to be able to buy our products the way that they said? The good news is the deal doesn't even kick in until February 14th, I think it is. So it's Lunar New Year, it's the worst of events, but you got to be patient and see if it's a virus, it runs its course, and it'll be sooner rather than later that it finishes, I hope. I don't know. So as we look at all these markets, let's get into the charts and get a feel. In the technology sector today, what the market's effectively done is over the past 2 days, it's come up and filled a gap left in the chart. You do see that. If I come back here, the gap here, the low of this day was 97.09. The high of this day, 95.86. So the market's coming up. Here's coming back to 97.19, 97.87, and you fill the gap. Is that it? Don't know, but I'll explain what I'm seeing on the chart. If this market doesn't take out today's high, be it an inside day or lower, the swing line, as I developed it, will turn down. So that would give you lower highs, lower lows. To stop that, you've got to kick the market over today's high. If you turn it down, the first support at least that I see is that line in the sand, as I call it, the 18-day average of closes. So 95.46 is where that is. At this point, right at this minute, you have a higher high, lower low. You do not have a trend. A trend to the downside is lower highs, lower lows. To the upside, higher lows, higher highs. The bias, however, is up because I define bias is relationship of price to whatever the number of the 18-day moving average is. So the bias remains to the upside. In terms of resistance, it's been, I think, crystal clear that the upper Bollinger Band number, you can ride it, but it's been the resistance point, and that's important. What else is important? If you take a look here, momentum is defined by the slow stochastic. It's two numbers. One's called a K line, which is the red. The D line's the blue. The whole difference in the formula is the amount of days. So on a daily chart, the K line uses 3 days worth of the formula. The D line, 5. That's the difference. Therefore, the red line's going to move around the blue. When it turns down, it often leads to the market losing that momentum and price trying to make a run at the 18-day average. I admit this all happened at one time. That's not the norm. But it all pulled out, and now that this market has lost that embedded reading, it goes from bullish to typically overbought until both numbers that make it up are back under 70. So what I have here in momentum is an overbought market that stepped out of its uptrend. Support's been the 18-day average of closes, and any close now underneath 95.25 without taking out today's high could set off a bit of a bear trend in this market. And if it did, maybe the lower Bollinger Band comes into play. In the industrial spider, the XLI, all you've done is come off the Bollinger Band back to the resistance point of the 18-day average. When a market is over the 18-day average, it is not uncommon for it to fall back and look for support at it. When it's well under it on a rally, it's not uncommon for it to get back to the 18-day average to figure out what next. The trend in this market is down with lower highs, lower lows. The resistance is the 18-day average. However, it is already in an oversold condition, and oversold happens when both numbers are under 30. Now, you'll say it's not, and I'm agreeing with you. I thought it was. I was wrong. We are not oversold. We're still in a downtrend. If you fall from here to the lower Bollinger Band, you'd obviously be under 30, and that would carry the market into the oversold. Either way it goes, I wouldn't be surprised if the market's looking at wherever that Bollinger Band number is when the market reopens in the morning as a potential support. In the energy sector, we're all concerned about this coronavirus. I'm so used to saying corona, being on a beach having a drink. In the meantime, lower highs, lower lows to the downside. You hit that number, the support. The numbers coming out of the API, the EIA have been not friendly. But even if they were, with that virus and the fear, I don't know that they do anything. Tomorrow we get the WHO. Will that create another shock or tame the market? Your guess is as good as anyone else's. But in terms of downside, you had run under the lower Bollinger Band a series of days. You can see that. You got yesterday finishing under it. Day before, under it, that's 2. 3 days under it, 4, 5, and this day. I'm telling you, 6, go count on the chart. It's really rare. So what you did is you finally just got to the right-hand side. It's a pretty feeble rally. Is the market going to keep running that band? Now the counting starts all over again. In QQQ, we've got a pattern where you've got now a market with a higher high, a lower low. We saw in the aftermarket, Tesla did really well. We saw in the aftermarket, Facebook stock got hit pretty hard. Which one's the market going to pay attention to tomorrow? You got to pay there and look. If you don't take out today's highs and you close back under 220.14, you will have turned the swing line down, the bias down, and you've already got momentum down. So the bulls have to defend that type of area. In the emerging markets, well, you know with China what's going on there. It's weighing on this, and you can see that. You don't need my economics to tell you. Lower highs, lower lows. I'm looking at the market, comes down to the Bollinger Band, bounces away, but it's not a turn of the trend. You are oversold. You spent too much time at this band to stay under it is what the market's saying, but it's not turned up. So does the market get worse from here? Again, I'm going to repeat, World Health Organization tomorrow. GLD, higher lows, higher highs. So unless the market takes out yesterday's low, and that low is 147.53, going home, the bulls grabbed control of the market. Now, they're in an overbought scenario, knocking on the door of resistance at 148.81. Because the Bollinger Band has gotten so narrow here, it's like a pressure cooker. Does this market get over 149.32 and give you a pop? That's going to be the question. Any close under 146.98 or wherever that 18-day average is tomorrow flips this market down into a downtrend almost instantly, and wherever that Bollinger Band is could be your first support zone. You're in a real important area here, but the bulls have the edge going home. The gold miners just keep hitting. The juniors, look at the 18-day average. Look at the 18-day average here. This market's void of a trend. It's just whipping, going back and forth, trying to figure out what it's going to do next. TLT, we had a market that pulled back, as you can see yesterday, closed under the Bollinger Band top of 143.42, but it's been in a breakout to the upside. This is what rules the day. When you get an embedded reading, until it's lost, it's telling you on the pullbacks, the bulls are still going to be there, and that's what's going on. This market is still running to the upside. On the energy ETF, lower highs, lower lows, just like we were looking at the sectors. Bearish embedded reading. You haven't even gone to the lower Bollinger Band at 1090. You could. Now, what would be the warning sign that this market's overdone its welcome to the bear side? Lose the embedded reading. Until that happens, with the red over 20, I say the bears keep control. By the way, you could even get here a really bearish situation of the 18-day average getting underneath the 200 and the 100-day, a real bearish crossover. Wow, that would be something. In the FXE, this is the FX of the euro currency versus the dollar. You just keep running that Bollinger Band. So weakness, weakness, weakness. And this market with an embedded reading, not even giving a bounce to a lot of traders to get short. What else do you watch? You could be getting near, again, a bearish crossover where the 18-day average gets underneath the 100. Now, is there magic to that? There isn't, but a lot of moving average traders watch these things, so I'd be watching it. You put it all together, the quotes will come in behind me, but I want you to understand. I have developed this new SPDR ETF video for my subscribers, and you can be a subscriber for free to it right now. No credit cards, don't want anything. Want you to see it, put your comments out. Do you like it or not? How do you get it from me? Well, first of all, it's not on YouTube as you're watching this. It's only going to be viewed either through our charting software and or my website. In order to get it, go to www.iraepstein.com. On the bottom right, you're going to see free offers. Open it, click on the SPDR ETF. We'll make certain to get you signed up for this. This is a free offering. It's not going to last forever, but I want opinion on it. You can also click here if you want to get to the free offers of our website. If you're watching me on YouTube, it'll take you there as well. I'm going to be watching that WHO announcement tomorrow. Let's see what they tell us and how the markets react. I'm Ira Epstein. Have a good day.